Hey everyone, this is Danielle. Welcome to the free video. So today I'm going to be talking about a setup that I like to call earnings destruction. This is a setup in which I identify stocks that have been rolling over and dying, particularly going into earnings. Earnings is this little bubble right here, and they're typically good candidates to short a couple weeks prior to earnings, but you could also trade the earnings report itself, and then you could also trade a post-earnings move if trading an earnings report is not your jam. So when you're looking at an example, this one is DKNG. I did this one in the options room, closed it for 100% gain on my long puts just this morning. This was one that I had bought puts on prior to earnings and ended up holding it for really 2 days after the fact. And as you can see, earnings report came out and just continued to fall. It met my downside Fibonacci targets and I closed it out. So this week, there's actually a ton of candidates. I posted this list on Twitter at Trader Danielle, just right here, so you can see my name. Quite a bit of opportunity. I did put on trades on both Lemonade and NVAX. Today, I wish I would have gotten Upstart. The only reason why I didn't look at that one was because they do normally trade higher on earnings, but Upstart's down, I think, like 40% right now. Let's see. Ouch. So Upstart traded from $77 to $43 a share. So this is the reason why we are looking for earnings destruction candidates. It's because you can trade them on the report, or like I said, trade them after. In the case of something like Upstart, I mean, you're not really going to be able to come in after the fact and trade it, just because most of the move has probably already been had. You can try, like in the case of Netflix, I did actually continue shorting this one after earnings. Netflix tanked. It fell to like, what, 244. I actually traded this one down to 200, and at that point I called it quits. But it's still falling, so hey, you never know. Might be able to keep shorting them. So let's look at a couple that are coming up this week. Roblox is one. This used to be one of my favorite stocks because it rallied so hard. I called it crack for kids one time on TV, and it kind of went viral, which was kind of funny. But the reason why this one has shifted, just like everything else, is because it was something that was once hot. It was a former IPO, really recent IPO. It was also something that was just so in focus because of the pandemic. Kids are staying home, playing video games all the time. But what has happened with a lot of these stocks is that they can't measure up in the current environment. And whereas when the market had a bunch of exuberance in it, nobody cared if these companies were making money or not, because they were momentum stocks, they were rallying, they had short squeezes. But at this point, the report cards matter, and they matter a lot. So that's why we went from, trading them to the upside to now trading them to the downside. Now, when you look at Roblox in particular, last quarter, this one gapped down 23%. They lost more money than was expected. And well, they're losing money, and they have been losing money this whole time. So that's the reason why it's one of the primary tickers on my list. Former COVID darling, shifted into a downtrend, got hammered on earnings last quarter. It's actually down to a new low just prior to earnings. And this earnings report is going to be on the 10th, which is going to be tomorrow. So with these kind of tickers, what I have been doing with them is, number one, like exiting any stock positions that you have if you want. Number two, the next thing I've been doing is coming in and selling some call credit spreads. Now, I will tell you, it's not that easy to short something on the lows. Also, if you're going to buy puts, it has to really tank for you to be able to make money on your puts, because the implied volatility is so high. If you look at the implied volatility here, it's at 264%. It's extremely elevated compared to this series right here, and that's because you have earnings in that series. So if you're going to come in and buy puts, which I actually have been doing on earnings this quarter, and it's been working pretty well, even though normally it's not that great of an idea, it's because it has to exceed the move that is expected. And well, a lot of companies have been doing that. So when you look at Roblox, I actually think I will probably come in and buy some puts for next week's expiration. That way, in case I'm wrong, in case it rallies a little bit higher, that will give me a little bit of time for it to come back. Because if you look at even something like AMD, this is like one of the strongest companies out there, and it's still getting completely hammered, down almost 10% today. AMD gapped up 7.7%, ended up the day up about 10%, and has completely rolled and given it all back ever since that earnings report. So if you look at shorting something like Roblox and you say, well, what if you're wrong? What if you're wrong? And it gaps up and it's, up 10%. Well, number one, that can definitely happen. If I was right every single time, I would be living on my private island in Belize, which I would buy based on my 100% win rate. But just kidding. I'm kidding, right? Anyway, what I'm saying is, of course, I can be wrong. If I am wrong, my plan would be to hold it because everything that has rallied on earnings has still rolled over and died. Now, I hope for the sake of the trades that I want to put on tomorrow that this does rally a little bit, just because it would give me a better spot to short it, like up until 30, but doubt that's going to ever happen. So I do like looking at those puts. The other thing that I do like is selling a call credit spread. That's usually going to be the safest thing to do in this market environment because you can take advantage of the vol crush. So you could do something like, $24.50, $26.50, selling it for 81 cents. I mean, it's not going to be a great risk to reward situation is the only problem, just because the price of these options they're kind of low. So in order to get a better risk to reward situation, I mean, you really have to sell it deeper in the money. So you'd be selling the 24s when it's trading at 24.61. In that instance, you're getting a little bit better credit, but still not great. Here, let's see if we make it a little bit smaller. So that's a little bit closer to 1-to-1. And then obviously you just adjust for how many contracts you want. But essentially what I'd be doing is I'd be looking to sell the at the money or slightly in the money call with a protective leg to sell some premium just prior to earnings. And the idea would be that, let's say I am wrong and let's say it does rally. Well, if it rallies and it goes up and it comes back down, or even just back to the same level, the implied volatility would go from 264 down to like 170. So ideally, the price of those options that you sold, let's say if you sold it for 275, the price of those options should go down a decent bit, at least to $2. And then even if it doesn't move in a directional manner, you can still end up making a profit just based off of the vol crush. So that's pretty much what I have today. Like I said, check out that list on Twitter. Another one that I'm looking at is Yeti. I'm a little hesitant with that one just because they actually do well on earnings, but the reaction hasn't been that great. They've got a squeeze going into earnings. You're up against resistance, so I am leaning more on the short side of this one, but not as aggressively so. Anyways, if you want to check out that full list, you can just go right here. I'll be posting more stuff throughout the week. Other than that, I hope you have a great rest of your evening and good luck in the market this week because it is crazy out there. Talk to you later. Have a great rest of your day.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.